Have you ever entered a breakout and then the price reverses immediately against you? The problem is not your strategy, and the problem is not that your strategy is not working. But on that same chart, there is some piece of information that you've not given proper attention. So when you look at this chart right over here, you can see that this is where we got a breakout. But on that same breakout, you can see that we have two candles. We have this candle whose body is crossed by the resistance level or the resistance zone. So this is not a breakout candle. The candle has not yet completely broken out. So you have to be patient. And on top of that, this candle has a very tiny body, which shows that it is an indecision candle. On the subsequent candle here, you can see that this is a breakout candle. This candle's body is almost 90% of the total length of this candle. So this becomes a very solid breakout candle. So the breakout candles are the ones which give us the most accurate information. Okay. So this candle's body is big enough, which shows that there is enough volume to keep us moving upwards. On the opposite chart, you can see that this candle which broke out right over here, this one is a fake candle. It does not broken out, but most traders enter from this candle, which is wrong. Okay. So you have to wait for a candle which has broken out completely, which is right over here. But this candle also has information that you need. The information you need is one. When you look at its upper wick right over there, its upper wick is too big, which means that the price has been pushed down by the people who are selling. And then that's why the price immediately dropped and then reversed against you if you had entered from this candle. And then number three, there is also another big point you have to note, okay? Whenever you get a breakout, do not use what we call the market order. You don't buy exactly when the candle closes, but you have to use a limit order. If here you had used a buy stop order, you would have survived this wrong trade, okay? But what you have to pay the big attention to is the candle which has broken out. The candle's body gives you a piece of information that shows that there is enough volume at this stage or there is not enough volume. Okay, so you need to keep that in mind. And then another problem is that sometimes the levels we draw are wrong levels. Okay, we for example, if we have this level right over here, you can see that here we have this outside market fluctuation, and this outside market fluctuation right over here is not going to be considered under our level. It is going to be considered as an entire zone. What does that mean? It means that our breakout is supposed to happen at this highest level. So we had to make an entry based on a candle which will break out from right over here, but not the candle which breaks out from right over here after connecting these two levels. So we have to also figure out why the price had to get rejected right over here. So let us first jump onto a live chart and then we see how to draw these levels correctly. So for example, if you look at this chart, if you're going to trade the H1 time frame, you need to move 3 frames of that time frame ahead. For example, here we're going to move to the weekly time frame. Then we shall draw patterns from the weekly, daily, and then an H4 time frame. Let me draw these ones real quick, and then we'll dive in. So on the H1 time frame, this is where we're going to be trading. So when you look at this H1 time frame, you can see that here we have a false breakout. Right over here, we have a false breakout. Okay. So let us look at this false breakout and what caused it. This is a place where we have seen our false breakout. So you can see that right here we can get some piece of information. Then the piece of information is that clear that we are seeing that after this breakout candle, the candle which closed entirely above our level of resistance is a false candle because it has a very upper wick. Its upper wick shows us that the price has been rejected by the people who are selling. So it means that the price is going to reverse and then go against us. And then you can also see that the subsequent candle also is a very big bearish candle, which shows that it has more volume compared to the previous bullish candle. And this gives us a very huge signal that here we are not entering. Sometimes they can happen, the information you can get it, but then the price moves high. It's okay to miss all that trade, okay? And then right over here, we also got a false breakout. This candle right here is not a breakout candle, so you need to avoid it. But you can see that on the chart, right over here, the price tried to break, okay, and then retest and then move higher. But here, probably here I wouldn't trade, okay. I would look at a lower chart and then see what is happening right over there. That is for the next video. But when you look right over here, you can see that we have some big information. Okay, here the price tried to move, and then we are expecting that the price would break this previous level of resistance that has become a support to come and then retest back on the different zones which were below. You can see that these candles which try to break out, their bodies has not closed entirely below the support level. So we wait for a candle which closes below the support level. That is our entry candle. And then you can see that here you tried to maneuver with some little bit of a break, but you would have gotten out of the trade using a trading stop loss. That's for a different video. So there is also another thing I would like to show you, and this is what we call a rejection. After the price bounces off, after the price breaks and then retests, there is some level of rejection. So for example, when you look at this level here, for example, this is our resistance, and this resistance was broken and then retested. I don't know if you can see this very clearly, but right here we have a breakout candle. It's our breakout candle. Then here we got a retest, and then right here we got some small here we got a retest. Okay, here we got some small little bit of consultation on a lower time frame, but doesn't matter. So here we got a move down. So after breaking this level here, we have this level of resistance, which was supposed to, sorry, this level of support. This level of support, after it has been broken, we got what we call a rejection. A rejection is whereby it's right on this candle right over here. Price breaks out. Okay, after price has broken out, the price tends to make a reverse or to make a retest, but then the candle which tests on the resistance or the support first will be rejected by showing a long upper wick or a smaller candle, okay, which shows that there is some little bit of indecision. And then the subsequent candle, if it comes out and then you get a subsequent candle which is strong, then you can take that trade. And this is what I'm talking about for small candles. Here the price goes back to retest and then it forms indecision candles, and then after it reverses. So you will study more on rejections and then comment in this video. Don't forget to like, subscribe, and also share.